Looks like he dropped. He's there. He's there.
चला रही तुम्हारे पानी फैल गया ना जी वीडियो कॉल कोई शादी के बारे में बात कर रहा है 2 मिनट पहले माइक अनम्यूट करके बोला शादी अरे हुआ नहीं ना स्टार्ट टेकिंग कर ये आवाज इसमें कित रही है गाना आएगी क्या अबे गाड़ी चालू से तो ना इससे तो कनेक्टेड है देखना तुम कुछ हो जाए तो सही तो कोई ये तो मुश्किल ही थी
This meeting is being recorded.
Hello everyone. We will be starting the earnings call at 4:35. Thank you.
ਦੁਨੀਆ ਨੂੰ ਬਹੁਤ ਕੁਝ ਆਉਂਦਾ ਮਾਂ। ਹੂੰ ਹੂੰ
Well, good afternoon, everyone, and welcome to the Q3 and 9M FY26 earnings call of Nisus Financial Services Limited. We have on call Dr. Amit Goenka, Chairman and Managing Director. We have Mrs. Mridul Goenka, Executive Director. We have Mr. Manish Meena, Director of Strategy and Corporate Affairs. We have Mr. Mahesh Mudha, Vice Chairman and Managing Director of NCCL. We have Mr. Sunil Maheshwari, Chief Financial Officer. Mr. Amit Jhunjhunwala, Chief Investment Officer, UAE Fund for NISIS. Mr. Avdut Sarvate, Chief Investment Officer, India Fund. And we have Ms. Anchal Singh, who's the Chief Business Development Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request the management to take us through the financials and the business outlook, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you very much, Rashi, for this introduction, and very warm greetings to all our stakeholders. Gratitude for joining our earnings call this afternoon. My name is Amit Goenka. I'm the Chairman and Managing Director of Nisus Finance Services Co. Limited, your company, which is also known as Nifco. I'm joined by my colleagues within the board, within the management, as well as our management from NCCL, our construction arm. It is a pleasure to present the Q3 and the 9-month for financial year 26 performance to you. I believe you may have gone through the presentation and the numbers already. It is a proud moment for us to be here together as we present a remarkable result once again, which is a bedrock of the trajectory that we have been charting for ourselves over the last 18 plus months. There is strategic intent and laser sharp execution across all our verticals and geographies. The 9-month period has been exceptional, but however, also in line with our expectations and projections, reaching a revenue of on a Nisus Finance Group level of 114 crores, pre-consolidation with NCCL. which is comfortably outperforming our entire previous fiscal year of FY25. Quarter three on itself reflects a continued operating momentum across our business lines. Excluding the NCCL consolidation, we have reported a quarterly revenue of roughly 38.7 crore rupees, an EBITDA of 28.6 crores, and a PAT of 20.19 crores, translating respectively into EBITDA margin of 73.9% and PAT margin of 53%, which is larger than our previous margins in the preceding quarters and years. While the 9-month revenue stood at 114 crore rupees, the EBITDA stood at 84.23 crores and PAT of 56.7 crores, with overall margins of 75.6% at the EBITDA level and 51% at the PAT level. This performance has been demonstrating our strength both on the advisory front as well as on the asset management front, which is supported by disciplined and focused deployment of capital, timely monetization exits, and cost efficiency across our cost structures. As a ratio, we are maintaining roughly about 49% of revenue from advisory and about 51% from asset management, a significant jump from our earlier ratios, wherein asset management today has overtaken advisory and stands at about 51%. Somebody is talking.
Rashi, can you mute others?
Sorry, sir.
Can you mute others?
Yeah,
There
yeah,
was some-
of course.
Some background noise, please. Okay, thank you. Including NCCL on the date of consolidation, the combined platform revenue for the 9-month period of FY26 stands at about 365.27 crores, with EBITDA margins of 28.4% and PAT margin of roughly 16%, which is a strong integration of high-scale execution business into our platform. Looking ahead, we wish to continue our momentum, and the outlook looks very strong and very positive. We are well positioned to meet our AUM targets of between 3,000 to 4,000 crores by the year end, as we continue to institutionalize the India urban infrastructure story as well as the UAE growth story. We have been actively engaged into smart redevelopment of Mumbai, tech-enabled growth in the GCC, as well as on a compounding alpha across our investments as well as on our balance sheet, while doing cost control and preserving our capital. It is important to understand our AUM or our NAV. We do AUM valuation or NAV valuation on a 6-monthly basis, and hence it is practical for us to report our NAV or AUM only at the end of September and the end of March. These are the two reporting periods in which the portfolio is valued. This is the current assets or the current investments in the portfolio at that period of time. We will continue to keep our investors informed as and when the NAV gets updated or the AUM gets updated, basis these valuations as is required statutorily, both by SEBI in India, by IFSC in KIF City, as well as by DIFC in the UAE. All three regulators require 6-monthly review or revaluation, which is when the numbers actually get published. Can we fix the camera? People are having an issue because the camera is zooming back and forth. Is it possible for us to fix the camera? We'll have to ask him to fix it on the Polycom. Can you fix the camera so that it doesn't keep on zooming in and out? let me say it started. From a strategic standpoint, Q3 remains a very important quarter for us as we continue to expand our footprint in the UAE. You may have read that we acquired one of our largest assets in the UAE last quarter, which was almost 536 crores of investments in one of the key micro markets of Dubai. It is approximately about $60 million in a large residential and commercial development in Dubai Motor City. Uh, we've seen a significant uptick in that micro market, and we believe that we will make a very significant upside from this investment over the next 18 to 24 months. This investment has happened through our DIFC fund, uh, through our Gift City feeder, and we've had significant partnerships within this investment. Two of the institutional investors, one being from the
हम रात में ही
GCC.
कर लिया है रात में के लिए लोग फोन फार में बिजी आ रहे हैं और आज सुबह भी कॉल कर लिया
Rashi, can you please ensure everybody's on mute, please?
Yes, sir.
Okay. On the execution front, NCCL continues to demonstrate strong traction, both in terms of mandate wins and balance sheet discipline. During the last quarter of Q3, NCCL secured a strong mandate for a development in Hyderabad, which is valued at approximately 40 crores of contract value, adding another 3.7 lakh square feet to the execution order book, strengthening near-term visibility in revenues and profits. Additionally, the company has disclosed that it has won a prestigious mandate from Lodha for about 112.5 crores of construction value in Alibag, making its third project with the Lodha group, reinforcing the repeatability of client base and its validation of being a strong execution partner for all of its clients, which are all AAA development companies. The active order book remains well over 2,100 crores, with a clear pathway to achieve a 5,000 crore order book in the near future, with the mix gradually moving from residential to non-residential and other institutional projects, enhancing diversification both in asset class as well as in geography. We continue to invest and exit simultaneously. We've exited one of our investments in the NCR recently with a strong 1.5x MOIC, which is again a reflection of our strong investment, disciplined underwriting, and timely exit. This was exited well before the term of the investment. Our own capital invested across platforms in multiple funds and investments has more than doubled, standing at about 120 crore rupees, reinforcing our alignment and conviction towards our own investments across our funds. The industry tailwinds remain very supportive. The India private credit market remains very buoyant, filling the financing gap between banking, non-banking, and other private capital space, largely driven by significant regulatory constraints on banks and non-banks. India's real estate market has witnessed a structural shift and preference towards private credit, as traditional banking facilities remain constrained by regulatory and capital limitations. SEBI regulated Category 2 AIFs, which is what we are, scaled rapidly over the past decade, delivering an attractive 12 to 21% IRR across residential and mixed-use projects, therefore enabling the entire growth of AIFs to over 14 lakh crore rupees today. We remain a strong beneficiary of this extraordinary growth in capital formation in AIFs. Our position as one of the leading private credit providers has been further cemented by our investments as well as our exits. It has been backed by several institutional and marquee investors joining various funds as well as in our individual deals. Real estate capital remains strong for the sector, both in public as well as in private markets, which is being supported by rapid urbanization on the back of strong allocation of capital by the central budget and under the 2040 master plan. There's been a global investor interest to participate in this growth story of India in the urbanization scheme, including into income generating assets, both commercial and non-commercial. We are seeing a clear shift away from distress-driven capital to first call capital, which is towards primary markets as well as towards new projects. The Union Budget of 2026 has laid a very clear roadmap for us in India with a very significant allocation of budget towards urban infrastructure, both in terms of road, rail, power, and other allied assets. which is further increasing the pace of urbanization and therefore our opportunity set to put our capital into multiple geographic locations as this urbanization accelerates. Further, the monetization of CPSE real estate assets through dedicated REIT structures is a fantastic welcome change, which allows a significant pool of assets held by government institutions to come to market, drawing significant domestic and global capital interest, and also accelerating our endeavors to bring more readable assets onto our platform. It deepens the market and brings additional capital interest as a whole. Uh, it is also going to try and unlock several surplus lands held by governmental bodies as well as other assets which can be monetized in hands of capable managers like ourselves. This entire move is deepening India's institutional yield asset market, bringing additional assets to the market, and enhancing liquidity, capital formation, and exit avenues for real estate assets and developers. In summary, Q3 has been an acceleration of our story, of our vision, and of our belief in the opportunity set that is very clearly present for focused managers, focused investors, focused platforms, which can play the entire urban infrastructure space, right from identification to advisory to investments to development to exit. And that is allowing us to accelerate ourselves on all fronts, both in India as well as in the UAE, which is seeing significant capital inflows. UAE has continued to remain an anti-fragile economy, and every geopolitical shift has only resulted in additional capital formation, additional transactions, and new opportunities for us in the UAE. We have slowly becoming one of the leading players in a very short period of time within the UAE. Our strong standalone profitability plus a scaled integrated platform with NCCL, marquee Dubai asset acquisitions, disciplined exits, and fresh mandate wins on advisory front continue to further augment our business trajectory and growth story. We remain focused on capital efficiency, our underwriting rigor, and the scalability of our platform as we're building a balanced cross-border urban infrastructure franchise designed to deliver sustainable risk-adjusted returns and growth for all stakeholders. We thank you once again for your continued trust and participation. I'm happy to take questions from here on.
Okay,
Yes,
great. Thank
Rashi.
you. Thank you so much, Amit sir. So if anyone has any questions, I would request them to raise their hand and unmute themselves, and you can ask your question.
Some questions have been posted as well. We can take them as and when you want.
So since it's an earnings call, we would request whoever has questions to raise their hand and unmute themselves and ask the questions themselves, please.
Okay, good afternoon, Avijji and team. My name is Tyagarajan Ramachandran. I'm calling from Chennai.
Good afternoon, Mr. Tyagarajan.
Okay, excellent quarter, sir. My best wishes to you and the team. A couple of questions I had. One relating to NCCL. The quarter seems to be a low margin quarter for NCCL. Is it an inherent, business nature that the margins are going to be a little less? And you've projected margin improvement. Is that coming from contracts, pricing, from scale benefit? And the second question related to that was directionally, does the non-residential mix that you spoke about, is it going to improve the margins over the next 3 to 4 quarters, sir? If you can give a steady state EBITDA in the next 3 to 4 quarters, it'll be helpful, sir.
Thank you very much. I will love to answer it, but I will defer this question to my colleague, Mr. Mahesh Mudda, the Vice Chairman and Managing Director of NCCL. The question remains, how is NCCL going to move forward? The margins have been low in the third quarter. What makes us believe that there will be a margin expansion to about 3 to 4% is as we projected over the next 12 to 18 months? And is it led by better contract pricing, by scale, or by diversification to non-residential? Maheshji.
Yes, I think your question is very right. And while talking, you mentioned that how this diversification from residential to other sector is going to help. That is the right question. That because we were focusing more on the resi side, where the competition is very stiff, and then your margins are also very competitive. But now strategically, because we have been focusing towards the other sector, industrial, IT, and data center, where definitely because we have the uh, additional advantage of the getting better margins, which was we'll see the quarter on quarter going forward.
Just to add to the your question, in Q3 specifically, because of the change in labor code, the NCCL financials have taken one exceptional provision towards gratuity of almost 4 crores. That has impacted the overall profitability of NCCL. Excluding that one-time provision, the margin improvements are already showing.
So, Mr. Tyagarajan, I hope we've answered your question. Three things were mentioned. One, Q3 is an exceptional quarter in terms of lower margins because of one-time provisioning of the impact of labor code. It is not a continuing item. It has been provisioned for once to take into account the new labor code which came into effect in November. The second is that the diversification, we talked about a Hyderabad contract, which is a hospitality development, a non-residential, where one is able to earn far better margins. And third, of course, is that we're able to get into a larger order book with major players. Today, with the construction pace in the country, there is a very significant dearth of high quality contracting companies, and Triple C is clearly one of the top 5 or 7 players in the space, and therefore its ability to expand its margins on the back of larger contracts and more value added businesses remains very much intact. Can we take the next question, please?
Yes, I would request anyone who has a question to kindly raise their hands, and then I will ask you to unmute yourself. Only then we will be taking questions. And any questions that are put on the chat, we will not be able to take those. I would request you again to raise your hand, and then only we will be able to take that question. So I would request Anuj, you can unmute yourself and ask your question.
My question relates to the exceptional item. Does 100% of the item relate to the change in labor code, or is there any other item playing into it?
Nothing else. There's a one-time
100% is towards the one-time provision towards gratuity. That is because of the change in labor code. Nothing else. No other exceptional write-offs or any other provisioning.
Even the actual valuation has been received for that.
Yeah.
All right, thank you.
Thank you.
Great. The next question we can take from Shashank. Shashank, kindly unmute yourself and ask your question.
Yes, sir. My question here is that in last con call you said that we are H2 heavy business, okay? But your traditional business without NCCL seems to be lower in Q3 compared to Q2. So what is the reason behind that, sir? And how should we actually see? I am an analyst, so I want to have some predictability. If you can give me some like Q1 will be higher, Q2 will be lower, something like that, H1 will be higher, so I can predict something.
You're right, Shashank. It's a good question. Seasonality is important, and typically H2 tends to be larger than H1, which is correct. We've mentioned that in the past. If you look at Q on Q results, Q2s look larger than Q3, but it is better than Q1. Now, Q2 is larger because we had certain investments that we divested. Now, what happens is that there is no periodicity for that, and there is nothing to do with seasonality for that. So when you say that I'm looking at, let's say, 120 crore top line, effectively, I'm looking at about 30 crore rupees of top line every quarter, right? Which is obviously what we are meeting or beating every quarter. However, a quarter like Q2 becomes larger than even the top line or the upper segment of our outlook, which is at 140 crores because of a certain income from investments. Now, certain income from investments can happen periodically, where we are holding on to a very large amount of investment. Almost, as I mentioned, about 120 crores of our money is invested. When I divest, let's say 120, some part of that, I will earn a certain amount of upside or market gains. Those are not things that will happen every quarter, but they will happen periodically. So, which is the reason why Q2 looks larger than Q3. But yes, H2 tends to be larger and will be larger. For example, today the order book and the order book for NCCL as well as the investment outlay for H2 is much larger compared to H1.
Okay, got it. So how much business will come from H2? Any number can you give?
So you already know our outlook in terms of top line, in terms of the upper end as well as the bottom end. You know that we've already beaten the bottom end of the projection, which was at 120 crores. Obviously, we're accelerating to now the top end of the projections. So you can
Yeah,
imagine what it will be for the rest of the year because we've already achieved a significant portion at 100 and what is the total? 114 out of 140 is what percentage?
97, 98. Yeah.
Prashant, we are at
Hmm?
where is 20%?
Only 20% is remaining, whereas we have 25%, which so obviously we've more than beaten that sort of estimate. So yeah, Shashank, I think that helps you give you predictions on. You've always said that AUM, top line, and bottom line is something we can predict. And that's exactly what we've been doing, and therefore that should give you a sense of the cyclicality or seasonality as well as the growth trajectory in terms of outlook.
Okay. And regarding triple CL, what should be the PAT margin we should expect in FY28, 27, 28?
I think we'll be moving from roughly about 2% to about 3.5%, 4%.
Yeah, correct. Between 3 to 4% we can say.
Okay, okay. Great, sir. That's all, sir. Thank you. All the best.
Thank you.
Prashant, just to add to your query,
Thank
we are rapidly expanding. So your question was more towards predictability. For a very high growth company like Nisus, we would always will have exceptional quarters, and in future also it will be the case. Having said that, what Amit sir has rightly mentioned, for high growth companies, you have to look at the longer horizon. We are beating our previous year performance with significant margins, and that will be the real story here.
Okay,
Okay.
got it, sir. Got it.
Next, please.
Thank you.
Great. Thanks, Shashank, for your question. Pawan, you can unmute yourself and ask your question next. Thank you.
Yeah, hi Amit sir. Congratulations for the Q3 results.
Thank you.
So my question is like initially AUM projection was like 4,000 crores, right? You have said like multiple times. So why it is decreased to 3,000 to 4,000 crores currently? Any particular
We're
reason, sir?
not saying that we're not saying we're decreasing it. We're saying we're giving a range of 3,000 to 4,000 without changing our revenue or our PAT outlook. What is happening is that with increasingly number of partners, our margins on our AUM have been going up also. As we get in more institutional players, as we get in larger players, they're happy to pay more because they're seeing a very large amount of outcome for themselves. So we're able to actually increase our revenue share on this on a slightly smaller base. And we are saying 3,000 to 4,000, which means it could be 3,500, it could be 3,800, it could be 4,000. Because again, it's a function of NAV and valuation. Please understand that when we are investing in the UAE, we are revaluing the assets that we are buying. We are buying these assets at a discount, and when they get revalued, we get to charge on the revalued amount. Now, I do not know what the revaluation number will be. We have an estimate, which is why I'm saying it could be anywhere between 3,500 or to 4,000 crores, but it is not to reduce the AUM or to have any impact on the outcome of our financials.
Okay. Thank you, sir. So like currently, sir, geopolitical tensions are currently there, right, sir? So you are considering that geopolitical tensions like US-Iran war, how it will be affecting Dubai real estate and everything?
In fact, to tell you, there has been an acceleration of partnerships. So, in the recent one quarter itself, some very significant transactions have happened with US entities and Canadian entities having expanded their footprint in the UAE. Recently, Blackstone entered with a $5 billion outlay, create yielding assets, including industrial, commercial, and other assets in the UAE. and have partnered with one of the UAE government entities to do that. This is the last quarter news. Likewise, Brookfield has gone and accelerated their investments to almost 4x by not only buying the entire gem school and a few other assets, but also creating another platform for development of assets in the UAE. So increasingly, Western capital is actually joining hands with the UAE to increase their engagement. Also, recently, NASA partnered with the Abu Dhabi government to create a space program, which is domiciled in the UAE to diversify the UAE risk of NASA and space programs away from Florida. So increasingly, UAE is becoming a epicenter for diversification of risk for major geographies and countries worldwide. So in fact, it is the most anti-fragile economy, which is the benefit that we are seeing, both in terms of opportunities as well as in terms of capital. So the more geopolitical risk, the better the outcomes are for ourselves.
Yeah. Thank you very much, sir. So, one last question. So, are we in line with main board listing in coming years, sir, in 2 to 3 years?
We have a 3-year block, as you know. So we listed in December of 24, which means only in 27. December of 27, we'll be eligible to move. Obviously, we remain very, very focused on that date.
Okay. Thank you very much, sir. Thank you.
Thank you. Next one,
Thank
please.
you. Thanks, Pawan. I would request Nishita if you can unmute yourself and ask your question.
Yes, hello.
Hi,
So,
Nishita.
I just wanted to clarify something. You've given a guidance of 650 crores in NCCL for the full year of FY26, correct?
Yes.
Yeah, and we'll consolidate the NCCL numbers in our financials for 7 months only, right?
Date of acquisition? Yes.
Yes, 7 months.
Okay, understood. So from my understanding, the whole of 650 crores is not going to be consolidated in our financials for
That's right.
FY26.
Yes.
That's right.
Okay, perfect. Thank you so much. And my another question was the PAT margin expansion that you mentioned in NCCL from 2% to 3.54%. We can see this in FY27, or was that for FY28?
Going forward, because this year, because we just started this partnership.
Next year, FY26.
So effectively, because next year onwards, April onwards, quarter onwards.
Sorry, I'm sorry. From next year onwards, we can see this.
So between FY27 and FY28, Nishita, what happens is
Okay.
the PAT margins are a function of your new order book. Your existing order book already has a certain margin and a certain cost involved. That is getting exhausted, and the new orders which are getting booked are coming at better margins. So you'll start seeing that transition effectively between FY27 and FY28.
Okay, understood. Thank you so much.
Thank you. Next, please.
Thanks, Nishita. Saurabh, if you can unmute yourself and ask your question, please.
Yeah, thank you. Congratulations, Amit sir, for good set of numbers. Okay.
Thank you, Saurabh.
Sir, I have been tracking Nisus since it was listed on the NC and BSE small. Yeah. So, sir, I've been tracking this. A few quarters was not good, but recently last 3 quarters have been very good, right? So, sir, when we can expect the tokenization to be live? So, because we have been tracking this since last 6 months almost, right?
So, as you know, tokenization is a product that we're looking at it from a UAE perspective. India's regulations on fractionalization and tokenization is still not clear. There is only a sandbox approval given by SEBI to do tokenization, right? It is not a mainstream product. So we're launching it in the UAE. We already started to apply for the licensing within the UAE, which is called VARA, the Virtual Assets Regulatory Authority, as well as in other jurisdictions from where the tokenization will start. We're looking to start the campaign effectively from Q1 of next financial year, when all of this licensing is behind us and we can actually take the product to the market. And so effectively, you will see the impact of tokenization in the next financial year, sort of.
Sir, and we have proposed $500 million, right? So
Yes.
do we expect this to be scaled in the same next financial year, or do we it can stretch
I
further?
don't know. I don't know. See, because currently, if you see the total amount of tokenization done by some of the largest players, including Pripco, which is backed by DAMAC, which is a $70 billion organization, is roughly only $100 million. So and recently the UAE government introduced two asset classes. One is the CBDC, which is the digital dirham, right? And they introduced their own as well as a digital dollar. So because they have introduced digital currencies which can now be traded online and through wallets, it will be possible to now accelerate this as they bring these digital currencies into mainstream. So we do believe that there will be some time to accelerate that. The availability of assets is not a problem. It is just that the regulator is taking it in a trajectory format. It is not allowing people to go and issue billions of dollars overnight and create a bubble. So we are ready. We can do it if required in the next year itself. But again, we'll have to see how the regulator reacts.
Thanks, sir. Sir, we also heard that we are exploring the SM REIT in India market, right?
Yes,
So
we are.
can you throw some light on that?
So we have set up an entity for SM REIT, which is which is the fund manager entity, is a subsidiary of Listco. We have started to apply for the license with SEBI to set up the SM REIT. We have identified assets which can go into that portfolio. We're working with several law firms and accounting firms to figure out all of the other nuances of that. So we will have better clarity in Q1 of next year in terms of the total launch time and size.
Okay, so we can expect the rate in the and the earnings from that in the next financial year, right?
Well, I mean, of course, once you launch it, then it's simple because it goes to the public for distribution. It's a public listed place. It is raised simultaneously along with the acquisition of the asset, and your revenue starts almost immediately. So it's the go-to market is not very long.
Do we have any numbers in our mind for the SM REIT, or we'll decide?
I think it'll be premature because currently there are only two SM REITs, as you may be aware. Both of them have been run by PropShare for two REITs of about 1,000 crores. So the market still is evolving. Our target, of course, is to be larger than that. But we are hoping that we can do that sooner than later.
Thanks, sir. Sir, although you have mentioned that we have mentioned the AUM on the 6 monthly basis, but at least, sir, if some throw light if it can be provided, because the AUM is the fixed business, right? Annuity business, right? And the
You're right.
and then the advisory is kind of it can lump sum, right? I mean to say, although we have been performing very good on the advisory also since last 3 quarters, right? But at least AUM, the investors had confidence that we have scaled up to this AUM, right? It gives some confidence to us.
No, you're right, Saurabh. But let me answer this in two parts. The first is in terms of AUM itself, right? I mentioned about the 6 monthly valuation, which allows us to only give you exact numbers at the end of half years. Having said that, we were roughly at about 2,000 crores in H1. We're looking to be at roughly close to 4,000 crores in H2. And so therefore, the third quarter is somewhere in the middle. So we can't give you the exact number because I don't have the valuation of that today. But you can assume that because the numbers that you're seeing in terms of revenue from AUM as well as from has only gone up, by the way, from advisory. If you saw the last few quarters since you've been tracking it from inception, where we were at roughly about 35% of less on AUM fees, today we've accelerated to 51%. This could not have happened without an expansion in the AUM, right? So I think that gives you some sense that there is more predictability because of AUM expansion and AUM fees expansion. The second, when it comes to predictability on the advisory, you will be happy to note that the advisory fees have been earned on a transaction value which is almost equal to our AUM of H1. Now, therefore, I've always maintained that there's a very strong correlation between AUM and advisory fees. So while we were earning money on 2,000 to 3,000 crores of AUM on a similar value of transaction of almost 2,000 crores, we earned advisory fees. So therefore, there will continue to be a strong correlation between advisory and AMC. While it looks lumpy or it looks unpredictable, but in our business it is not. The amount of we put gives us the same amount of opportunities on the advisory side. And so while the AMC fees will expand, because obviously you will have a larger recurring income as the AMC expands, but the correlation between advisory and AMC will not go away.
Thanks. So how, sir, could there be probability that we miss AUM target of 3,500 to 4,000 crores, or we are very much confident on
I
achieving
don't
that?
think so. I don't think so because, as I said, the pipeline is very strong. We have over 1,000 crores of deployments planned, or in late stage of deployment within the India fund. Similarly, we have additional 1,000 crores of deployment planned. In this quarter as well. So there is enough transactions that need to be consummated in this quarter alone. So I don't see that as a concern. But again, as I said, we will be able to get to the exact number closer to March end once we have the entire thing locked in.
Okay, sir. Apart from this, the projected AUM, how many the value we have in the pipelines?
I'm sorry.
Apart from this AUM, right? What we are projecting for this financial year, how many additional revenue? I mean to say the AUM we have is in pipeline.
So we have, like you talked about tokenization, we talked about SM REIT, we talked about the UAE fund, we talked about the India Credit Fund. So there are a number of AMC opportunities which are in the pipeline, which will continue to accelerate the AUM. So it is going to go beyond 3 products to maybe about 6 or 7 products in the coming year, and that will obviously further accelerate the AMC and the AUM business.
Thank you, sir. All the best.
Thank you, Saurav.
Thanks.
Yes, please.
Thanks, Saurav. I would request Shruti if you could unmute yourself now and ask your question.
Hi all. So sir, I have 3 questions. So the first one being around, so recently the company reduced its controlling interest in NCCL from 69% to 54% to repay the loan, right? So like, do we plan on repaying the balance loan also by divesting, or like how can we see that going?
No, we don't. No, we don't. So this was a preemptive idea. At the point of purchase itself, we had agreed that both with the lenders as well as with the management, that we will be holding majority stake of 54%. And that's exactly what we've done. So it was not something which was an afterthought, Shruti, because we did not want to keep that kind of debt on our books. Number two, there is no intent to further pare this stake immediately. The company will be ready to be in the public markets at some point in time in a short period, at which time we will see if we need to further divest as existing shareholders. That's an event which is a little away. In terms of repayability of debt, today the debt has been significantly further reduced. So when you see our liabilities or our long-term liabilities or debt as of March end, you'll see that it's now shrunk to a very, very small number. And we have enough cash flows from operations and internal accruals to actually repay it off almost immediately. That does not bode very well for the lender. They're getting very perturbed by the idea that we are repaying their debt in less than 6 months. So we'll keep it for some more time, a small amount of debt, but the idea is to exhaust it immediately.
Okay, noted. So follow question on the so you're saying you'll be listing NCCL. So like, do you have a timeline in mind,
As
probably
I
2
said,
years, 3 years?
it's in the distant, it's in the future. The idea is obviously for the company to be able to grow to a point. See, it's today already a competing company to some of the larger players who are listed like Capacity or BL Kashyap or others. And so therefore it will have to go to a capital market route at some point in time. Uh, can I give you a date? I think it'd be premature. We've hardly been in this company for 6 months. So the idea is that when we accelerate our outcomes over the next 12 months or the next financial year, I think we're better poised when you see the numbers and we see the numbers and you see the strength of the company getting unlocked to obviously make it a far more meaningful conversation.
Okay. Okay. So another question being, so like, what is the source of other income for the standalone statements? Because when I see the amount in consolidated statements, it is reduced. So like, can you help us
Sorry, can you
understand
ask that
that?
again? The question?
Question is
So this
standalone other income is more than the console. So this is
yeah.
because of the partnership interest between the subsidiary entities. So what we do, we share whatever the share of Nifco, I mean the listed one has in the subsidiary LLP entities, that is being distributed to the standalone. That's why the number in the standalone is higher than the console. So we got the elimination factor in the console entity being implemented.
Right. And obviously, as you know, that the AMC has earned more. AMC income comes from subsidiaries, and therefore the AMC income, obviously, when it goes as a share of profits from the subsidiaries to the parent, it will look larger. The parent is largely taking a percentage of the advisory income.
So can you please repeat the last half?
So I'm saying transaction advisory gets booked in the parent as a
Okay.
standalone, and the AMC fees comes as other income because it's part of the subsidiaries. Since the AMC income has
Okay.
been pretty large, and that also only in India, because then the advisory fee of UAE is separate. That does not come in the standalone. So because there's been a very significant advisory income which has also got booked in the UAE. So the India advisory income is seen as income from operations in the standalone. The other income is income from the AMC in India, which is a share of profits of the subsidiaries. And that, of course, is much larger. Therefore, you see that disproportionate now.
The reason in our next presentation, we have provided our financials, which is NICE's consolidation without NCCL. So core business of NICE's, which is transaction advisory and fund and claims business, you will get the full picture on that from the management presentation.
Okay. Okay. So one more question. So, like, there was an update in the financial statements as well from 26 Jan, saying that NICES has received an in final approval to grant NICES DIFC a license from DFSA. So this is relating to which fund?
This is in the Dubai fund, Shruti, where we have an operating business in Dubai, which is the fund manager. We've taken our own, which was one of the objects also of the IPO, was to get our own licenses. We've procured the approval of DFSA to further launch our funds in the DIFC, and which is why we'll have both inbound and outbound funds getting registered and raised in the DIFC. So it's a license for us to now operate on a full-time basis with all our own, with additional funds in the DIFC. So that's the approval we've got.
Okay. Thank you so much.
Okay.
Thank you.
Thank you, Shruti. I would request everyone to limit their questions to two at one time. JKC, if you, since you were not able to raise your hand, please feel free to unmute yourself and ask your question right now.
Thanks, Shashi. Folks on the call, can you hear me okay?
Yeah, we can hear you.
All right. So, Mr. Amit, a couple of questions that I have. One is, you just called out that it's very hard for us to give you the exact AUM that we have under management at this moment because of the valuation and all. So, if I could draw your attention to slide number 21 in the investor presentation, right? What I'm seeing is a very precise amount of AUM being called like 1726 in India and 1819 in Dubai, right? So how can we come up with such a precise number when
Where is
when
that?
we
Which sheet is that?
Let's
uh,
go to the give me
slide
a second.
yeah, sure, slide number
Which sheet
21,
is that? Which
uh,
sheet number is that?
20, 21 21 growth outlook for FY26 and beyond.
Yeah.
It's for H1.
No, so
That's only
if
an
you look,
H1 number, no?
no,
That's
if you look at
sorry. Let me see.
FY26 end, right, we are calling out 1726 and 1819 as the precise AUM target we want to achieve by end of 26.
Yeah. So that's an outlook. You're right. So which is why I said that. See, again, one is estimating what will be my NAV at the end of this financial year. We know the valuation metrics. We know typically how a valuer will look at it. Deloitte is the auditor there. It values the assets. It gives us the number. Likewise, Apex and Deloitte do the valuation in India. So, this is where we believe this will be the estimate basis the parameters of valuation. So again, that's why it's an estimate.
Okay.
We think it will be in the ballpark thereabouts. But again, it could have some variance basis what is the rent in the UAE, what is the total amount of YTM in India, etc. So basis that there could be some variance to that.
Okay, so that's more acceptable actually for me, a range of 3,000 to 4,000 or X to Y. But when I looked at such a precise number, I was like, wow, we are so sure that we'll hit those numbers. I was like, I've never seen any management be so precise. right?
No,
So
it's a
that
good
number.
it's a good observation. I like your sharp eye. I think it's all computer generated when you put in your existing investments and then you put a formula on how the NAVs are usually calculated by the auditor. They throw up certain numbers. Does not mean that the auditor will sign off on the same NAV, but that is what effectively the team
Okay.
picked up and put up. So
Okay.
without rounding it off, but it's a good observation.
Okay, so thanks for clarifying that. At least I just wanted to be sure my understanding is correct. And the second question I actually had was, so in one of the previous call, somewhere I had heard you mention that we get roughly about 300, 400, or 500 deals come our way throughout the year, right? And we, based on the quality and our confidence level, we kind of fund 10, 15, 20, whatever that number is. So the question I have is, if I were to ask you, like, what would be the deal size of all the 500 opportunities that come our way, right? Whether we fund it or not, that's a different thing. But what is
Yeah,
that?
what is the value of the deals that
Yeah,
you
yeah,
evaluate?
yeah.
And therefore you maybe put
Sure.
2,000 crores to work, but what is the total value of deals that you actually see?
Sure. So we roughly see around 400 to 500 trades. And they range from, say, an amount of 25 crores to 200 crores.
So average would be what, 100?
So average would be around 100 crores.
Okay, so
So
it's
seeing
like
400.
400 times 100 crores, right? So it'll be around
Yeah,
40,000.
400 into, say, yeah, 400 into 100, so 40,000
Oh,
crores, yes.
okay, okay. And just one last thing, if I could squeeze in, let's say we want to hit a target of AUM of 8,000 in 2027, right, or 2028, whatever. So let's assume that we are in 2027, we achieved that 8,000 crores. So what is your end
Yes.
vision, Mr. Amit? Like, where do you want to take this from 5 years? Take Nisus 5 years down the line,
Right.
or 7 years down the
Now,
line?
I
What?
always give an example of a pair which has a very similar sort of a history, wherein around 2018, 19, they were at about 1,000 crores of AUM. In about 25, they're at about 60,000 plus crores of AUM in a similar space. I think they're looking to also maybe go public or do some private equity or whatever. So I'm saying the acceleration opportunity, if I look at a comparable player or a pair which is went from 1,000 crores to 60,000 crores in a span of 7 years, you know what the AUM growth potential is. Okay, that's number one. Number two, that was only an India play. Okay, we are now adding India along with UAE to start with, and but not just UAE, GCC as a whole, which means we're already looking at Bahrain, we're looking at Qatar, we're looking at Saudi, we're looking at other markets also, which are also looking at their own growth stories and are welcoming global managers and investors to look at their countries. So having said that, if you were to look at that opportunity set and comparably, and of course we're more conservative, we don't only go by AUM, we go by actually the delivery of returns on the AUM we manage. So therefore, a 4 or 5x growth on that number also doesn't seem very tall, to be honest.
Mhm. No, that's very helpful. I just have one comment or observation,
I
but
would
I'll follow.
request.
Yeah, I'll come in queue.
Yeah.
I'll come in queue. Rashi, yeah, I'll come back in queue. Thank
Okay,
you.
great. Thank you so much. So I would request if you can join the queue again.
Yeah.
The next question we can take is from Nachiket. Nachiket, please feel free to unmute yourself and ask your question.
Yeah, hi, good evening, team. Am I audible properly?
Yes,
Yes,
please.
yes.
Congratulations on a great set even in this quarter. And thank you for publishing results in Q3, even though you're not really required as an SME. That's a
Thank you
great.
very much.
Yeah.
Very few people appreciate that, Nachiket, but we like to be as transparent as regularly available and share our successes, maybe sometimes a failure also with you, because there is no one-way story in our life, right? But happy to transparently share everything that's happening with your company in as frequently as possible.
Yes, absolutely. That kudos to the team at Nisus for that. Actually, one
Thank
of my
you.
queries just got answered on the previous question. The other one is we recently got an exit from the Skytech investment which we had.
Yes. Yes.
So I noticed that that was well ahead of the expected timeline.
Yes.
So a very small query on that as to whenever we exit an investment ahead of timeline. I am guessing it's a win-win for both parties. Could you just elaborate further as to what are the advantages for us and what are the advantages for the investee also to come to an exit
It's
before?
a good question. Two things. First is for us, because we are significantly invested. For example, some sale like this means we're selling our securities to a third party at a premium. So when you see we've generated certain premium on sale of our securities in Q2 as well, right?
Right.
So when you sell our securities, we obviously generate a premium on sale because it's a takeover of our sort of securities by a third party.
Correct.
So we're obviously better off in terms of revenue rather than keeping a certain yield. We're getting a certain upside on our own investment as well.
Right.
That money is obviously being utilized into some other investment, and therefore the AUM fees continue unabated.
Right.
So when we have the opportunity to reinvest the capital, we have the opportunity to take an upside on sale and exit. Obviously, that is a double upside for us to go forward.
Correct.
As far as the investee company is concerned, typically there's a certain time frame. So, for example, I gave a 3-year time frame for this company to complete a project and exit. But as we know, that is usually never the case. There will
Yeah.
be environmental issues, there'll be approval issues, there'll be RERA issues, there'll be some other issues. Now, these companies usually sometimes want an extension of 1 or 1.5 years beyond the term, something that we can't grant. So what it does for the investee companies gives them the opportunity to take additional capital or new capital by exiting us at a premium and be able to complete a project over the next 18 to 24 months, which is not within our term. So it is therefore win-win for both.
Understood. Yeah, great. That's the only question I had. You have been
By the
very
way, the interesting part about this investment was that this was an investment where we had partnered with the Government of India fund called Swami, and
okay.
both were investors in that, and both got an exit at a very good outcome, largely because of our efforts. So our
Right.
partnerships have actually seen very strong outcome because we partner with very strong institutions. In this case, with the Government of India fund, which was a co-investor or co-lender to this, and both got exited because of our endeavor. So therefore, it is a great opportunity to also prove to partners who invest with us, this is how we can create exits for them.
Absolutely. Great, sir. Congratulations on that. That
Thank
was
you.
the only query I had for today. Keep
All
up
right.
the good
Thank you
work
so
and
much.
best of luck.
All right. Thank you so much.
Thanks, Nachiket. I would request Sahil, if you could unmute yourself and ask your question, please.
Thank you, Rashi, and good evening, everyone. Sir, I have only one question. May I know, like, how much is the dry powder in our fund, like, across all the fund, the money which is yet to be deployed?
So, when you look at the UAE fund, it's $500 million. You've hardly deployed what, 130, 150, 130 million, right? So there's enough runway as far as the UAE fund is concerned. The India fund is about 2,500 crores. We've put about 1,500 crores. So enough runway on the existing capability, both in India and the UAE, to more than meet our targets for this year and the next year.
Okay, and what are the timelines we are looking for, like, to deploy these funds?
As I said, we're looking at new product launches, new NFOs next year. So as I said, even for next year, if you have to finish all of this capital, which we will, then of course we would have met largely a next year target just on existing products and capital. But of course, we'll want better, and hence we're doing NFOs next year.
Okay, so is there any new fundraising on board, like, considering we
We
already
discussed about tokenization, we discussed about SMD, we discussed about other products which are in the pipeline. So all of these, obviously, when they get launched, will obviously raise their own capital.
Okay, perfect. Thank you, sir.
We have a very strong LP base and distribution in place, so that's never a concern.
Thank you. Thank you so much, sir. Thank you.
Thank you.
Thanks, Sahil. Anuj, you can unmute yourself now and ask your question. Thanks.
Hi, thanks for taking my question. So I wanted to ask, can you provide any guidance on cash flow, and can we expect it to be positive both on a standalone and a consolidated basis for this financial year?
So cash flow from the operating will be, positive for Nisus without interpolation. We have to figure it out on a consolidated basis, because on a consolidated basis, the debtors of interpolation and of Nisus are very different. So working capital changes you will find maybe very large compared to the last financial year.
So let's break up this into two parts, and which is why we present this entire story in two parts, right? One is the advisory AMC business, which is Nisus Finance, where there is no problem of operating cash flows.
Yeah.
Because AMC fees is accrued and earned almost simultaneously. Whatever receivables are there are very small, and largely that is from our advisory business, both in UAE and India, because there are milestones for payment on completion of an advisory service, right? So, for example, when we ended up selling a land parcel to a large developer, They said, we'll give you your fees in three parts. One on closure of the transaction, second on getting our basic approvals, third on getting RERA. While we have no obligation to meet those timelines, but usually fees are basis certain milestones. So fees booked, accepted by both parties, sits as receivables, but received in 3 to 6 months time basis these milestones. So that is where our business is, right? So you will not have a problem operating cash flows because, as you know, the margins are very large compared to the receivables. So the operating cash flows are very positive. When you consolidate with the NCCL, it has got its own working capital cycle, right? It's got its own debtors, it's got its own debts, it's got its own receivables from its existing projects, which, by the way, are also a function of the advances they've received on mobilization. And therefore, when you club the two, it looks like a very different picture, but that does not affect the solvency or the operating capabilities of both the entities individually.
Got it. Thank you. And can you provide the working capital cycle for NCCL? How long is it?
It's currently at 2 cycles.
Is it 2 or 2.5?
It generally goes up to the outer limit of 90 days because that's the industry norm.
90 days.
Yeah. So, um,
about four turns.
The adjustments because of the accounting, what they have done right now, the current working capital cycle is 2. We are in the process of doing the financial restructuring of their balance sheet, do the right classification that should improve their working capital cycles significantly. And Anuj, also to on Nice's business, Nice's cash flows, when you look at it for the reporting purpose, both the cash flow from operations and cash flow from investments, both are for Nice's particularly, it is same. It is the cash flow from operations only. Even if we are doing investment, where the cash flow will reflect in investment, it is our core business. So when you combine both cash flow from investment and cash flow from operations, you would see a very large positive cash flow for Nisus.
So what we're investing into our funds comes into the investment side, but that's a mandatory requirement for operations.
That's accounting
For the purpose of accounting treatment, we're showing it under investment, but it's actually operating income because without that, you cannot operate your fund. So if you combine the two, that is your true cash flows from operations.
All right. Thank you.
Great. Thank you so much. We will take one last question from Ajay, and then after that, we will close the earnings call. Thank you.
Hello. Hello. Can you hear me?
Yeah, Ajay, we can hear you. Go on.
So, congrats for the good quarter. Sir, I wanted to know about receivables as mentioned in the last quarter. How do the receivables look now?
Can you repeat your query again?
How do the receivables at NCCL look now?
Receivables at NCCL.
It is regular receivables only. There is no default. There is no.
Some look down. Is how receivable reduced? You are saying.
Yes. Have the receivables reduced as you had mentioned in the last quarter?
There is a recovery
for accelerated collections.
Yeah.
So what is the story now? We are reducing our receivables, right?
Yes, because we have been putting a lot of pressure. We have been following it with the receivables, and we are keeping a track on the existing jobs also with the help of because nicest team, our team, because we have been following it very strongly. So of course, because has to be under control.
And will Nisus be acquiring more companies like they had acquired in NCCL in the future?
We don't know that, Ajay. I think there has to be a very strong synergy and value unlocking opportunity for us to be able to do that. You know, we've known this company for a very long time. I've known Maheshji for nearly 20 years. We've known the management for a long time. We've seen how strong they are in their business. We've seen how they've accelerated their business with some of the largest players in the country. Many of these developers are also our clients because they've borrowed money from us, or they've done business on an advisory side with us. So very strong synergy. To find this kind of fitment and our ability to unlock value by bringing them on par and above their peers is a very exciting journey for us. So there is a very strong integration between the teams. It's not just a random acquisition. Number two, there is a very large unlocking opportunity which can create a very large multiple for ourselves in a very short period of time. And therefore, if you can find something like that, know the company for many years, be a part of their journey, unlock it, and give them a very large multiple over a short period of time, that is of great interest. As of today, I don't have that immediate sort of a target of that nature. But if you do find one, we'll be happy to report it. They were asking how many 560 people are on the payroll of NCCL, correct? What is the total employee strength? Sorry.
Total employee strength is around close to 900 now.
900 employees on the
Uh,
payroll.
I would request that any further questions to be taken separately, since we have to close today's earnings call. So I have dropped in my email, rashi@goindiaadvisors.com in the chat. So please get in touch with us if you have any further questions or want to meet the management for any further clarification. But thank you so much, everyone from Nisus. And all the investors and analysts who attended the Q3 FY26 earnings call for Nisus Financial Services. Thank you so much.
Thank you very much for joining.